right, so I'm going to go over my new trading strategy with you. This is BEG Coins. You can find me on Twitter. My Discord link's going to be in the description. Anywhere there's social media, you can find me at BEG Coins. For the most part, I'm on Twitter and my Discord, trying to keep it simple and private at the same time. But here we are looking at OMG. OMG seems to be the top token right now, top bullish token out of the entire market right now. We zoom in real quick. While the market was dumping, it went up. It went down like everybody else did, right around this area. Yeah, right here, $7, and it came right back up over several hours on the West Coast, U.S. last night. So we're going to take a look at, we're going to do a clean chart on OMG, show you the strategy that I use, that I've pretty much upgraded it to include the Fibonacci extension and retracement levels. You might have seen them in my most recent charts previously over the past year or so, but I went into every dip. I go into heavier research and studying, one, to verify that the support levels I bought at were exact, and two, that I actually tried to sell near as close to the top as possible. So entries and exits, making sure those are precise. I'm going to try to keep this as quick as possible. I'm going to try to explain as much as possible and make it as quick as possible. This is how I long trade, this is how I hodl trade, and this is how I day trade as well. I use the same exact strategy for day trading. First several things I do is I include, we're going to go through the list. I add the EMA 21. So I just find the EMA. Let's go through it real quick for all the new people. Go into indicators, click on indicators. Here are all my favorites, and basically just type it in as is. Pause the video, take a picture of this, whatever the case may be. These are the indicators that I use for the most part. The 3 EMA gives you 3 EMA lines at once, and that happens to be, I then go into it, into settings. I go to inputs and I change them 50, 100, and 200. Golden cross or death cross is the 50 crossing above or below the 200 day. So that's those are important levels to remember and to keep an eye on. And I have the 50 day at the red, 100 day at the yellow, and the 200 day on the purple. You can choose any colors you want. Click OK. Same thing for EMA. Go into settings. It typically gives you a 9. I put a 21. You can have as fast a moving average as you want. The lower the moving average, the faster it is. I use the 21 day. It's pretty solid for overall trading, and even on the 1 week chart, it's a very important level. If it's bouncing off of it and continuing the price above it, it's very bullish. If it breaks under it and stays under it, or closes under it, it's looking bearish on the weekly and overall hodl trader indicator as well. The 21 day is very important. So I really don't use anything under that. I could, if I'm day trading, I could use the 8 or the 9. That helps. And then I also go into style, change it to whatever color you want. I click on the color, make it as dark as possible, and you can use a thicker line to show. I'm going to actually leave it at that, to show where the price action is going. And price action typically at this high level, we're on the 1 day chart, price action typically follows it. It either breaks out under, breaks out over it, and those are pretty good entries and exits for hodl trading and long term. Those are the EMAs. The next one I like to use as a spot indicator, as far as like where I'm at with volume, where the crowd is at with volume. I use the volume profile visual levels, and blue shows you the buy orders, and yellow shows you the sell orders. And right now in OMG, at all levels, this is the 1 day looking at the overall chart on Binance, it shows you support, heavy support under $5. And then up here we have a lot of buyers probably stuck from up here, waiting to get their orders fulfilled here at the top. And sell orders are very thin up here. So if we take off over here like we did in the past, 2017, then you know why. There's not very many sellers up here. Not very many whales were holding this token. It is a very volatile token. As you see, we get the peaks and then the drops, 80% drops. Sometimes we go under the 80%. We go negative, but overall it held its bowling action. It held its long-term action. We got another spike and we got another drop back to where it came from, honestly. So very volatile token, but the best part about OMG right now is it's a long lost Ethereum layer 2 token, basically to help layer 2 tokens are to help reduce emissions and gas fees from Ethereum. So of course it's going to be in play if you're willing to hold from here. This is on the daily chart. You're willing to hold for several weeks to get to the point where we were today at $12. More power to you. But overall, it's a long lost coin. Not very many people trading it. So this is why you get these spikes, because the sell orders aren't here to keep the price down. So here, based on its history, you don't want to jump into a token. You don't want to jump into this token just because it flashed up. It's going to find its equilibrium, and as you can see here, we jumped up just today. We jumped up to $12. Let's see. We look at the top here. The high is $12.25, and we're right back to $10. But because the fundamentals look, or the technicals look pretty good, I use the website dyor.net. Sorry. dyor.net, the technicals look very good for the day, but I don't think it's going to end very well in the daily. We'll see. Now, with that information, now that we're privy to that information as a very volatile token, as you can see here, a lot of what are called whipsaws, ups and downs within the same range, within the same day. We're starting to get better stabilization here over the past several months since mid-2020. One of the best accumulation months you can possibly ever have. A lot of DeFi tokens were at their bottom. A lot of new DeFi tokens came out, and most of those are multi-billion-dollar tokens. You might have had 10, 20, 500s, maybe even 1,000x off these tokens. So summer of 2020 is a very good year. Then we get this blow off top, which coincides with beginning of May. Same thing happened with Bitcoin. We got a top at near 65K. So with all that now we're all privy to all that information. The other indicators I use are the Stochastic RSI down here. Stochastic RSI tends to show you, give you an idea as to where the RSI is in its cycle. And right here it's showing it's at the bottom of its cycle on the 1 day. So we could possibly see a move up. If you're trading the 1 day, if you're trading the higher time frames, the 4 hours, the 1 hour, 15 minutes, all that stuff, even the 1 minute people is going to show a much different story. We're either early into this trend or we're late into this trend. And from what I'm seeing, we're late. Another one I use, obviously one of the most important, is RSI. Another adjustment I make to RSI, hit the drop down menu so you can access this settings menu. Sorry, one sec. Making sure my voice is on okay. Done that too many times before where I'm full out going into an analysis and no audio. It looks like it's working. First thing I do for RSI, I do step line so I can see more clearly where the action is turning at. You can change it to whatever color you want, as thick as you want. I like to keep it pretty thin. And then also another adjustment I make is I make the top line, the upper band into 80. 80 is a pretty good indicator of, we might get another 10% from there or 15% before moving down, but it's a pretty good area to just get out of a trade just based on RSI. So change that to 80. And another one I use, it's a secondary indicator for me, don't really use it as much, is MACD. It can also help give you an idea of where the moving averages are at in their cycle for any given time frame. You can see if it's twisting, the blue twisting over the red or the orange, whichever one it is, and it's pretty much going sideways here. So we're probably going to continue to get some sideways action within this range here. I need to show you all of my toolbars. All the tools that I use, go through this really quick. Obviously the crosshair to be able to grab, you can use, there's another one, whichever indicator, like you use the dot, arrow, whatever. A lot of people use the arrow. I use the cross for whatever reason. Fibonacci retracement and extension tool, which I'm about to use in a minute. This is the text box where you can click here and add some text and give some notes wherever you're at on the chart. The arrow line to show, say if we have a declining volume profile like we did here, you can show that, use that, or to show a trend, whichever way you're trying to show it. Obviously the trend line arrow, if there's a trend going on, you can mark it out. Makes life easy for showing trends. And then obviously the drawing tool, you need to show something going on a live stream or anything like that. The price range tool as well, if you're trying to show how far up. See, I got the magnet tool. I don't like the magnet tool very much. Trying to show where flagpole, using the flagpole to show how high the next move can be for an asset, and there, that's an example for the next move up. And then the circle tool, if you want to be more clean with what you're trying to illustrate in a move, use circle. And then I like to use the call box to show, say there's a support and resistance level. I'll be using those a little bit later. We're going to try to go through this very quickly. We zoom all. First thing you do, zoom all the way out. You can click on to get all these to get this toolbar down here and to get all these tools to show visible all the time. You just click on the little star next to any tool that you're going to use. The first thing we do, we zoom out to the day. You can zoom out to the week if you want to get have less data to deal with. Find the lowest level, the lowest point of the graph of the chart. Start from either 1 or 0 from the bottom, and then you go to the very top of this move here. Okay, and that is the high is 29.63, and if you want to adjust it precisely to where the tops and the bottom are, you click on the Fibonacci, click on the settings menu that comes up, hit coordinates 29.63, and then the bottom is somewhere down there. I'm not going to worry. Oh, actually, undo. That's the bottom. 29.63 is the top. And click OK. Go back into the settings since we're looking at pricing going from 0 to 100%. You can change the Fibonacci price levels as values. I have it at values as decimal. That's just how I read it. Or you can change it to percentages. See that how they turn it into percentages. Most people change the percentages. Maybe one day I'll switch to that, but that's how I like to understand it is from 0.0 to 1.0. You can change it that way. Have extended lines right all the way out. So you can always see that price action or the Fibonacci action happening no matter how much you move the chart. The first obvious levels I like to have on Fibonacci are obviously 0. This is all out of order, but you'll get the idea. These are the basic ones: 0, 2.72, 3.82, 0.5, 618, 786, 1, and then you start going into the extensions, which we'll just plot out here for the time being: 1272, 1618, 1786. Learn your Fibonacci extensions, levels, sequences, all of it. Just deep dive into it. Start with Fibonacci retracement and extension levels to understand the basics. It's one of the most important tools in trading, and as the deeper you go in, you'll understand it's the most important numbers in all of the universe. Actually, it's a universal math. So check that out. So I like to make it gold for when I do color coding for all these levels. One thing you're doing is you're putting Fibonacci level on every time frame that you use. So this is for the hodlers, the one-day chart, and to get an overall zoomed out perspective. You have the 1-day chart. So that's the first one we start with. We're not really worried about this action over here. We're just mapping it out as to what has happened before. So then we zoom in, we scroll over, zoom into the 4 hour. 4 hours is another level I prefer to use. You find, so let's go back one step. You find the swing high. This is called the swing high. This is called the swing low. Let me do a little extra for you. So something for you to remember. Swing high, copy paste. So you can copy and paste any indicator and be able to utilize it on the same page. Swing low. And you want to do this on every time frame that you use. Find the swing high, find the swing low, map the Fibonacci retracement extension tool from the swing high to the, or from the swing low to the swing high if you're trying to map for the price going up. If you're trying to map for the price going down, you map from the swing high to the swing low, opposite. So now with that, when we zoom into the 4 hour, and we find the swing high and the swing low. So we can start with the swing low and go up to the swing high, which is pretty much identical. Well, not identical. It's actually different. What I do is I change the color. I like to use green for the 4 hour chart. Now we zoom into this. Now we're just dealing with this zone. This is the zone we're dealing with. You can use this color coding as much as you want to, but this is the zone that we're playing in, and this is the zone that's important for us if we're just trading the 4 hour. Okay, I'm not going to leave that up there. It's distracting. And then from here, yeah, also you want to click on the frame you're doing, go into settings. If it's not from zero to 1 or 0 to 100%, go in here and hit the reverse button. Now, third thing we do after we do that is we look at confluent levels. Right there's a confluent level between the 786 and the 272 between the 1 day and the 4 hour Fibonacci levels. Other levels you want to identify as important. On the 4 hour, we accumulated right between the 382 and the 618, the green, which is for me the 4 hour. And we also, on this last move down, we tapped the 382. So very important levels to keep an eye on. We have the confluent lines here at the so what I didn't do was flip. I forgot to flip the 1 day. So the confluent levels change a little bit. So in my eyes, we overextended this wick here, these 2 wicks. We overextended past the 1 day charts, the high time frame charts 272 level, which makes it an important level, and we broke back over it. But we also, on the 4 hour, we tapped the 382. So this zone here, this is a future support zone, or possibly if we break down from here, it's a future resistance zone. So whether we come down from here a little bit further, however the action happens, back to the 272 on the 4 hour, that's going to become a resistance zone. Idea here, to me, there is no such thing as being a bear or being a bull. There's just the market. The market gives you what you can trade, and you just have to learn how to trade it. I learned how to do what's catching knives. This is what's called catching a knife. It's a very precise level of where possible price action can go. We went to the 618, possibly the not 786. That's a low time frame. We went to the 0382, and we could possibly, if we do come down from up here, then the next zone we're looking at from the high time frame, we're going to another low time frame for a temporary bounce. And so after the temporary bounce happens, this is a nice area to play for a quick, what's called a swing trade. From 272 at $6.44 all the way back up to somewhere between $7.80 and $8.26. Let's see. Oh yeah. 20 minutes. All right. So we'll come back up from the 272. We'll get rejected at the 272 on the 4 hour possibly, and then we'll have to find another reaccumulation zone. Hopefully it's back in this zone before we move back up. Also, you want to keep your eye on the RSI. OMG, the RSI looks very shady on the 4 hour. It looks like it popped back up from a level of support, but at the same time, it looks like it's hitting a level of resistance on the 4 hour as well. It looks like a bear dip, what's called a bear dip. Look those up, bear and bull dips. So it looks like yeah, exactly as I said, we channel within this zone before we move up. And that is just or before we possibly move down again. Who knows? We could break this 30 RSI level and come all the way down to 0 or down to 20, 10 something. We could break that level of support, which has been a level of support for a long time on the 4 hour. So now this is mostly about this video is mostly about Fibonacci levels and how to use the indicators surrounding it. So we're going to move on from the 4 hour to show you how to set up the 1 hour. So now same process. What you did, you find the swing high right here, not necessarily that one because we're still working on that level. Swing high to swing low right there. I don't like using the wicks like that. I'd rather use the V reversals there, but for the sake of this video, we're going to just stick with what we have here. So then we line it up from swing high to swing low. Let me give you another visual. Swing high within, it's a swing high within this range. Double click, swing low. Okay. And then again, if you want to make sure you're in the right zone, it's going to be pretty obvious after that. You'll see what zone you're playing in. And then you have your extremes on the outsides here from 786 to 1.0, and then you have your extremes from the 278 to the 0 as well. Let's zoom out again. Okay, so that's one way you can keep in mind what zone you're trading in, or you can keep it even tighter and say, all right, this is as far as I'm going. If it goes under that, I'm out of the trade. And that's pretty smart because the 382 is a very good level. As you see, it's respecting the 382 level. 382 level on any time frame is a good time frame to use for support. Illiquid shitcoins, shitcoins with not very much volume, altcoins with not very much volume, they tend to go all the way to 272 and maybe a little bit lower than that before they possibly get the volume to spring back up. One thing I forgot to do is change the color. I didn't have to go that far. I like to use the light blue for the 1 hour. And then we also know it doesn't need to be reversed. We're going from 0 to 1. Coordinates are fine. This is just for an example. Make sure you extend all the way to the right for the first 3. For the 1 day, 4 hour, 1 hour. Let's get rid of this just to clean up the chart so you know what zones you're in. And for me, for what I'm seeing here, it wants to retest on the 1 hour, it wants to retest this area, which it has a few times, and it's trying to gather enough interest in volume to stay above the 1.0 level or the 100% level on the 1 hour chart. That would mean a lot of volume would have to come in continually at every 1 hour interval before it possibly moves up to this resistance area at 1072 and makes another charge for the 0382 level again. But from what I'm seeing happening here, I think we're going to get a little rejection back to the support level on the 1 hour as well, which coincides with the length and distance. The length and distance from here to here is pretty much the same that you're going to see from here to here. So we'll probably come somewhere to this candle support level, volume support level. You bring up the volume profile, you'll probably see some volume there, as you see right there, exactly as it is. This is just a support level. That's why I don't have it up. It clutters up the, I don't show it very much because it keeps you from seeing the Fibonacci levels. So you'll get an idea that according to where the RSI is, we'll also get maybe we'll get a bounce in that area, and it might be a temporary bounce. It could be a 1 hour bounce where we get 1 hour volume. It could be a 4 hour bounce where we get 4 hour volume. But the 1 hour can go as low as we went already, which is less than 20. So we're going to have to see where we're at there. Stochastic is bending down at the same time that the RSI is bending down. So we could get somewhere between the high volume node on the volume profile or somewhere back to the 0786 at $9.42. So last step you want to do to see, this is for the day traders to get entries and exits, is to go to the 15-minute chart. And you have all these lines going here. You have to understand where your color coding is. For whatever time frame you're on, you can go in and get rid of some of the higher time frame stuff if you just want to focus on, say, the 15-minute and the 1 hour, or you just want to focus on the 1 hour and the 4 hour. Then you can do that. But for this sake, where you're understanding the color coding, the yellow is the high time frame 1 day. Green is the 4 hour, blue is the 1 hour, and then now we're going to switch up another color, swing high, swing low. Now we are going to use this swing high. We also have to use this swing low down here. Okay, and now because it looks like we're coming down, we're going to have to reverse first we're going to change the color. I like to use that magenta, but you want to reverse it because we're going down now. So you want to go from 0 down to 100% to understand where the next level of support can possibly be. It's getting crazy, but bear with me. Now we're focusing on the very low time frames, entries and exits. RSI, as you see here, the arrow's still showing. Looks like we're waiting for the RSI to hit support either here or somewhere down here. Ideally, you want to wait for it. You can either add in these zones or just wait for the absolute bottom for it to curl back up. And also wait for the RSI, have the RSI coincide with, on the low time frames, coincide with high time frame bounces as well on the RSI. And that's how you know real volume is going to come in. Ideally, on the 4 hour and the 1 day, you're going to see the most volume come in. So you'll also have to learn time frames here. This is on the 15-minute, and there's 5 minutes and 53 seconds left on it. Every time frame has its own timer, and every time zone has its own time for when these time frames end. So for what I'm seeing here, we got rejected at a lower high. The 21-day moving average is trying to support it here at the 0272. And as I said before, ideally we're going to come back around somewhere around there with this high volume node. For support, we're going to want to see somewhere around here. We have a lot of confluency going on between the 1 hour 786, the 4 hour 0.5, and then the low time frame 618. If we're working with the low time frames right now, this is the zone you want to work with. And then from here, we have what's called the golden pocket. The 0618 to the 065. So we can add that somewhere. Add that to the chart, 0.65, and you're going to get what's called a golden pocket. It's very high probability bounce area. So we're going to want to mark that out as where we can possibly go. Yeah, it can go this whole zone here. It can go this whole zone here from $9 to $9.42. Let's take the high probability area. We might get a 0.5 test, so $9.26 to $9.05 as to where it can go. I think we're in pretty bearish territory for the next week, while the government's fear, uncertainty, and doubt the market and the news and the media, and they can push down prices. They can overextend prices to lower levels to get better entries because they're all in it too. They're all in it. But they want retail and governments that don't play by their game to suffer temporarily. Because most people don't hold once we start dipping. They just sell and create liquidity for the market. So let's see if that's it. Let me check my checklist. Moving average on the low time frame It was a very sharp move here. We got a golden cross on the 15 minute. So if we zoom out to the 1 minute again, or the 1 hour, we're looking at the 15 minute. We got a golden cross there. 4 hour, we just got a 15-minute bounce off of the 50, the continuation indicator. Whether it's done or not, we got a pretty sharp move, high volume in this area. Stochastic bounced up. It's hard to tell with OMG, and it's not worth the risk. If you're a long trader, it's going to be worth the risk. If you're a day trader, it's hard to tell where to get in at and how to trust this action. And that's from my perspective. Honestly, you're going to want to play the 4 hour and the 1 day and wait for this action to really clear up. There's a lot of uncertainty. All these Darth Maul candles, these whipsaw candles, creates uncertainty. So you might have to zoom out even more to get an idea of what's happening. We got a support touch here, and then we got an overextension here as well. And so it's going to land somewhere in between before we get a really good full picture of what's really going on with this. But that's how I swing trade and day trade, and even long-term hodl for most coins. For long-term hodl, there's one more thing. I'm going to re-emphasize this. When you create let me get rid of everything. All you need to see is this. And you can even go out to the 1 week. This is all you need to see. Get a more clear picture of what's actually going on. All you need to know is this. Here's the all-time high. Here's the all-time low. You ultimately want to see this price action hit the 618 before you take it serious. You want to hit the 618. And I'll give you a little example of how these markets work. You want this price action to bowl up. You want to hit the 618. You don't want to go any lower than 382. Absolute worst case, shitcoin goes to 272. And then you want it to accumulate in this zone and then break out from the 618 to the 786, get an accumulation above 618, a retest, and then you want to go back to all-time highs, and then you're probably going to get an accumulation in this zone again, maybe another market pullback back to the 618, high or low, and then another breakout above all-time high. It's not going to look exactly like this. It's going to be some bowling action. You're going to see it shoot up. OMG, like every other token, once Bitcoin hits over 100K, is going to see new all-time highs that you never thought were possible. And lost and forgotten tokens like OMG, they'll be the last ones to move, but they're going to move the hardest. Okay? So these are things you want to keep in mind. If you're a long-term hodler, you want to buy on the pullbacks back here, 272s and the 382s. That's what you want to look for. The next time we come up to 618, don't get hyped and buy at $18. You're going to want to buy at 382 at $11.50, $12. Okay, so that's one of the most important things to keep in mind as a hodler. And learn your RSI, learn your stochastic, learn your MACD, learn your moving averages. Definitely, this looks bullish on the weekly for every indicator here. Weekly, all of it. Maybe OMG just needs several weeks. So that's the analysis. It works with every chart of any kind, any equity, whether it's cryptocurrency, Bitcoin, Ethereum, XRP, ADA, AOS, Telcoin, and all the way to stocks, any type of stocks. Same process. I'll make more videos in the future, but if you liked what you saw and understood anything, then hit a like or subscribe. And if you have any questions, hit me up on YouTube. Hit me up on Twitter or my Discord channel. Thanks for watching.